Stocks around the world rallied as the euro strengthened. Luxembourg Prime Minister Jean-Claude Juncker, the head of the Euro group of finance ministers, visits Greece tomorrow. German Chancellor Angela Merkel and French President Francois Hollande meet in Berlin on August 23rd. Markets can test highs of the year. I'm Brittany Umar, and the morning call starts right now.
Good morning. My name is Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar, and together we bring you the morning call. So, still mixed signals out of Europe, but markets continue higher, just shaking off any concerns there on hopes that the Eurozone will keep it together. What do you think, Scott?
I think at this point they're definitely jawboning enough, and there's enough rhetoric saying that they can do everything that it takes. Ever since a few weeks back when they did come out and say we're going to do whatever it takes to keep the Eurozone together, they started to negotiate a little tougher with Greece, but that seems like it's getting done. Germany seems to be siding with the ECB somewhat. I know there was some rumors yesterday about the ECB bond buying, capping the yields, which I actually think is out there too. So all in all, though, markets are acting really well. We're never going to have complete clarity on what's going to go on. The European Union is going to take on many different forms, but that shouldn't stop you from investing in the equities market or coming up with a plan, because those with a plan are doing pretty damn well.
And futures are setting a positive tone today. Today, the SPX could test the highs of 1422 set back in April, so it'll be interesting to see how it handles that area.
Yeah, a lot of people focusing on that, and it is an action area. But really, you have to focus on the last year worth of action. If you take a look at the chart of the SPX, you'll see, we talked about this outside day way back when on October 4th. Remember this? You had to move all the way up here into the first quarter, which is 1422. And then we had the big pullback that everyone's so scared of. Remember that pullback? Well, if you go like this from this low all the way to the high here, remember this high at 1422? What was the retracement? It was above the 50% mark. It retested the breakout from early this year. So healthy action. Then you look right here again. This is the June 4th low. Okay, this is this year. And ever since then, we've been riding the uptrend all the way up. And then if you go a little closer, you'll see that August 3rd, we accelerated a little bit, more of a momentum move. This was on this day. This was that jobs day. Remember that? That was August 3rd. And then we had that tight little range, broke above. And then like you said, here we are, 1422. Looking to break above the highs. Question is, do we break above and extend through it, or do we do a bit of a push through failure? But all in all, every time frame it looks as if we're going higher, and at this point you don't want to chase the move. You want to book them and trail them, or trade them and trail them, which is what we say, because it can't take your money once it's in the bank. Right? All the bears like, the bulls are going to get theirs. Just wait until September, they're going to get hit over the head. But meanwhile, if you already booked a lot of your trade because you use a tier system, they can't come after you and rob you at your bank for the profits you already took because you took advantage of the 3 weeks of great trading. But anyway, healthy looking move. Don't fall asleep, but at this point, don't fight it either.
Very true. And a lot of people out there were complaining about a week ago that the Russell wasn't participating, but now the Russell and the transport seem to have joined the party.
It seems like over the last 2 weeks, everyone tried to come up with reasons why not to be in the rally. They were saying, the Russell's not involved. The transports aren't doing that well. Meanwhile, there's always something to complain about, and it's not a perfect environment. Everyone complains about the volume also, but we haven't had volume in years. It's the new normal, and you have to just readjust your trading style. And if you do look, like you said, look at the IWM. Okay, here is the Russell. Yes, it was lagging, and it's not near the highs, but it broke this recent downtrend. It's hanging out up here now. It looks all right. As far as the transports, it also, broke. Remember, we discussed this. I think this was the last time I talked about it. It looked like it was going to break above this for a trade. Broke above it, hovering. You look at the macro chart. Yes, it's not at the highs, but it is in the game above all the moving averages. So in August, what is it, August 22nd or so? or so. I don't know the exact date. You can't complain with the action. I think a lot of traders are actually pleasantly surprised with what we've been seeing taking place.
Yes, and speaking of the action, we're seeing banks hang in there, casinos back in play, of course, action in high beta tech, and yesterday, the metals woke up. So let's take a look at gold. The GLD has reclaimed the support of most key moving averages, so could it break the downtrend?
That's a big could. It's a big question mark. And yesterday, before we get into gold, silver is what led the way, which was a little surprising because typically, you have a bit more conviction when gold leads the way because it takes a lot more money to move gold. So whenever gold goes first, you get a little bit more conviction that the move is real. But again, it's a summer, who knows? So, first, actually, we'll go with gold. You take a look at the chart here. I am long a little bit. If you want to first take at a macro look, remember this outside day here. We've had many trends controlling this tape, and they've been controlling it ever since. Here's your big macro downtrend that hasn't even been tested, but look where we are right now. Here we are at an inflection point from this big down there. Remember in February when the Fed came out and it sounded like no more QE and pow, controlled. And now look where we are. We're coming in very, very tight. It'll be very interesting to see if finally it can change some composure here. I am long some if we can get above, what is this, 157.80 with some real volume and real conviction and not look back. I will add to it. And then the next real level would be around 162. So at this point, I think gold is a tier 1. It only becomes a tier 2 if we can get above 157.80, 158, and really not look back.
All right, well, let's go back to the SLV there. Silver did break above the resistance zone that you outlined and said it needed to get above to show some change in character. So what's the next step now?
For the last 3 days, I tried to have a small position in silver because it was getting tight, and I knew with all the action out there, if I don't have a small position, I'm not going to see it when it happens. So yesterday, we're at our desk. I think it was like around 10:30, 11 o'clock, and then pow, broke through that 27.45 to 55. We did add a little bit to get to a tier 2. If you look at the chart, this is what you love to see as a trader. Tight, 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 and then pow. And then what did it do? It closed on the high. So this was a healthy day. So let's see if we can get some follow through. If you go to your left and you look at some price points, this price point right here is about 28.76, which is, a decent follow through. And then you have this at 29.02. So really your next level here in silver, what should happen, if gold goes today and this move is healthy, we should get a beeline move in the next session or so to this 29, and then we'll have to see how it takes place and how it acts at the 200-day. So at this particular point, I'm going to stay with this silver trade. Not going to really add too much. I'm just going to try and ride it out and maybe take a few trades along the way. And at this point, it's finally waking up, so it just shows you that you rotate with the money. So as other things get extended, you go to what's tight and what looks like it's in motion.
And speaking of follow through, the GDX has reclaimed all key moving averages except the 200-day. So do you expect to see some follow through in the coming sessions?
It looks like it's in the game also. I'm not going with the GDX just because, the miners to me are hard to handle. Every time I get long the actual miners, they do a secondary and mine blows up. They talk about nationalizing something. But anyway, you don't have to be in everything. I chose to go with silver and gold. But if you are in the miners, which a lot of guys are, sometimes there is some alpha there. You take a look here, you will see that this is when it broke this recent downtrend right around here, when it started to get and stay above the high of about 44. It's gone sideways since, and you have another nice tight pattern here also. So if it could start getting above this recent flag area, starts getting above 46, this too could get up to the 200-day and test this recent resistance here. And it's been a long move to the downside. I would say just be careful picking individual names in the miners because they definitely are difficult. But at this point, it could go higher. I don't think you need to be in all three. And I think just pick one or two things within that group and try and ride it out.
Well, coming up, we're going to go over some strong names from Monday's session and how to trade them now. But first, a quick commercial break. We'll be right back.
Hello, everybody. My name is Pete Renzulli, Chief Marketing Officer of T3Live.com. Really excited about introducing you to and inviting you to the first T3 Live Active Trader Summit. There's going to be a ton of great content, but the number one reason you want to come is you want to be able to network and associate with other like-minded people who have a burning desire to learn how to be a trader. So I'm going to ask you to make a trade. Trade one Saturday for some of your time to come down and learn strategies, tactics, techniques, and put some faces to the people that you see in the virtual trading floor in T3 Live, and learn to take your trading bigger. Learn how to be a better trader than you are now. Learn the strategies. It's going to be a lot of fun. Go to T3Live.com and register. If you would like to join us at the post-event cocktail reception, you can also upgrade to either premium or VIP. That's up to you, but either way, please take advantage of the general admission. 2 free tickets. Come down and expect to have a great time.
When discussing strong names from Monday's session, we have to talk about Apple, which had great follow-through, adding 17 points to Friday's session. You actually took Apple off the table for yourself, went home without it. So what level would you go get back involved in now?
I need to wait and see. Every now and then, when things get extended, they could always get more extended. You just have to take some chips off the table. And for me, it's been a great ride. It's been like 3 weeks, and it really made my pre-Ironman training easier and my post because I wrote this out, and it was very methodical. People on TV all day were yesterday, oh, no one saw this coming. How did it go parabolic? I thought they missed earnings. Meanwhile, technically, there was a lot to like and a lot of entries, and it actually made it very easy for traders who trade from this type of thesis. And if you look at the chart pattern here, you'll see, this was what happened after earnings. Remember, after earnings, it gapped down. 2 days, that's all it's set down there. And you know what? It could have broke below it, and it held. So your first real entry was right here when it broke above this 580.80 in the gap, and it showed power. 3 days went right through it, above it, showing you that it wasn't containing it. So that right there was your red flag or green flag to get involved. I actually missed this part of the move. And then finally, when it held right here and held this gap, that's when I got involved, which was right around 602, 603. And then you had a little downtrend or a little resistance area right here to add to your position. We talked about it many times at around 619, 620. Then you had to move to 625. It flagged, then it went above, then it flagged again, and then pow. Last real entry was when it broke above Friday's high, or the 52-week high of 644 on Friday, and now look where it closed. So at this point, it's up $3. I guess if you're long it, definitely trade them and trail them. There's a small chance I look for a divergence where the futures go, Apple runs out of a little gas, and I might look for a little cute short in Apple, but I'm not going to do the cost average game. I think a lot of guys yesterday got blown out of the water just shorting it the whole way up, thinking it can't go higher. It could always go higher. So if you're going to do that trade, trying to be cute can make you ugly, and I think it's the wrong trade. Obviously, the real money's on the long side, but at this point, it is a bit extended. It's away from the 8, it's away from the 21. I need to see some type of pause, reset situation for me to get back long it. And at this point, either I'm going to look for some kind of sell setup or a quick long, but at this point, I might just leave it alone because it's been a good ride and I don't want to overtrade it.
That's a good new slogan for you. Try and be cute, could make you ugly. I like that. And as we mentioned, banks started to get into motion yesterday. Goldman Sachs ignited the bullish move that you had been expecting. So what levels are you watching now?
We actually on the price point sheet yesterday, I think at 103.95 because it's been tight. The banks had a nice move off the lows and they've been consolidating. And then yesterday, while the market pulled in, a lot of the banks perked up. So relative strength rules 101 in summer trading, you can make money that way. Combined with price points, you look at the chart of Goldman Sachs, it broke above this recent resistance. And I remember trying it on this day too. It didn't work, broke out and failed. This time, what did it do? It broke out and closed near the highs. So momentum traders probably went home long this thing. So it's above the 200-day. Really the next level, I would say, in Goldman Sachs doesn't come into play until about 108 to 110. So I think you stay with this. I think Goldman Sachs at this point has been acting better ever since it held the support here around 90, 60. And again, look at the strength in this move and then the size of the retracement. Not much. So you had a few different entries, this being one of them right here, getting above this 101 and change, and then right again above 104, and then you have some room there, and I think you have some room in some of the other banks as well.
And Facebook showing a little red dog reversal action yesterday. What are the key levels to know today?
Facebook. Everyone loves talking about Facebook. At this point, it's just really tactical. No one knows where the bottom is. No one knows if it's going to be sustained. But yesterday, finally, after everyone in the world said they hated it and it broke 1980 last week, you had a pivot. 19, that's the pivot. That's all you know about Facebook. Besides, who's that guy that sold like all of his stake yesterday?
Yes, the one of the directors of Facebook, Teal.
Right. But you know what? It's also past news. He sold it already. But what I also know is I think it was negotiated even before that it was going to take place, not because it was down, just because of whatever. So anyway, that's old news. The chart is new news. You take a look here, you will see. Last time we had a sustained move, it came from a red dog reversal right here, if you remember. This is when it broke below that 27.76, went to, the low is 25.75. Went as low as 25.52, 20-cent stop, and you had a nice move up to 32. Now, remember it broke this 1980 for a move lower. Yesterday's low or Friday's low was 19. Yesterday, it went below, went to 1875, came above, so you had a quarter risk, and had a nice move. So the question is, what does this lead to? Does it lead to anything? Today, it's down like 20 cents because of the news that the director sold a big stake. Yeah, it's a little problem that these guys are allowed to sell it, but that could be an opportunity because yesterday we closed in the highs and we'll see it's down 20 cents. You go real quickly to the 5-minute chart. I would say if the stock's any good, it doesn't break below 1970 today. So if it holds 1970, maybe you look for a negative to positive move for some cash flow, but that's about it there.
And we did talk about casino stocks being back in play. Yesterday, Las Vegas Sands showing relative strength. How are you playing this one?
This one has been a great trade. You know, since the capitulation lows, we talked about it. Finally, the news came out on the earnings. They weren't great, but from 61 down to below 36, it was worth a shot. You know, you look at the chart here, you know, methodical a few different times. Here was that capitulation low we talked about. Here's a minor downtrend where you could have added on. Then you had a flag pattern again where I remember talking about it on Wednesday, saying it's a buy above this price point. The price point was 39.64, went over the morning close, was on off the charts. P.S. Here's your third day up. So at this point, I'd be very light. You know, here is buy number 1, buy number 2, buy number 3. Here's your sell into strength, and give it some time as a 200-day will be some resistance.
All right, let's do some quick hits here. JP Morgan sitting right in front of its 100-day, with banks starting to get some momentum here. Do you think it'll reclaim this moving average soon?
It looks like, and it also looks like it's going to try and fill some of that gap from the London whale. You know, it's been a methodical move off the lows, very slow. But I think there could be a sexy type trade here. And if you look, I'm long a little JP Morgan. I got long yesterday with the relative strength. You look at the chart here. You know, this was, I remember this day we were in here when they finally came out with the size of their loss and it rallied up. You know, here it held higher and now it's really, really tight again. And look at the size of this, you know, this big gap here. So yesterday, small green day showing you, you know, some relative strength. I think it's an add. You could probably add if it gets above and stays above 37.87 for some type of trade to fill a portion of this gap. And at some point it gets filled, and once it gets filled, it negates a lot of this pressure. So at this point, there's a trade waiting there, and I'll be looking to see if I can catch it.
And Amazon taking a break from a 2-day rally last week. What level does it need to hold for momentum longs to stay involved?
I think it's trying to hold the last time we bought it, which was 238. You had two areas. One was 230 or 228 after earnings, and then you had 236 to 238 last week. It's definitely not acting like Apple, and I don't think anything's going to act like Apple, so you can't expect it to. You have to bring down your expectations. But if you look at the chart here, you know, holding in there. Last real powerful move was on earnings day, right there, and then it came and retested it, and then I think I was involved with this 2-day trade, and now it's holding above it. I would say the longer it stays above this 237, 238, I think the more conviction guys will stay, or at least guys will just stay with it. Then your next momentum move is when it takes out this recent area, which is about 243.35. So at this point, it's not Apple, it's not Google, but you know, it's tradable. So you know, make sure that you know your levels.
And LULU has started to act better. Did have an inside day yesterday. Can it get to that next level, in that next major level in the next few sessions?
This isn't like the LULU of the past where it was providing leadership. This was a lower level laggard type play. There was a nice little setup there. We talked about it. I think we listed it. You look at it. You know, at this point, here is your red dog reversal when it broke below 53.19 and then came back strong right there. And then you saw some commitment going sideways. Then it broke this mini downtrend. And then yesterday you would have thought, yeah, we would have had a bit more follow through, but it's not. I think if you're long it, stay long verse 60. At some point, if it fills this gap here, you know, I would say that it's a little bit better. But at this point, it's just a trading vehicle. And if you're an investor and you're not out of it yet, or you didn't see this breakout failure right here, just be very careful that, you know, the stock to me feels somewhat broken. It's trying to repair here, but, you know, make sure if you are long it still, you know, just actually have a high level stop here at 57.60-ish.
Finally, LinkedIn building a base above the $100 level. Is it a good spot to get involved here?
It hasn't acted the same way we would have expected after earnings. They had a great quarter. 3 quarters in a row, this company's now come out and proved that it's not the Facebook that everyone puts it in the same class with. It actually has a viable business, and it's proving that it could be institutionally held. But again, with the pressure on the group, with the pressure by the media, and just, you know, this and that, it hasn't had any power. But it held the earnings gap again, so you take it and put it in stride. You look here at the chart, you will see, you know, this was after earnings came out right here. Okay, had a gap, you know, got negated quick, but it's still, you know, it's holding a portion of it. The shorts couldn't push it in here, and yesterday had a green day closing the highs. So I went long a little bit yesterday, and I'm going to put my stop in at 125. But, you know, I will add to this if it could get above 104, 104.5 and show some authority that it can get back in, that, you know, it can get back in vogue. And if 1875 is a low on Facebook, maybe, you know, LinkedIn, which is best in breed, that still is holding higher, can, you know, get some traction here as it's still, you know, within 20 points of its historic highs. And these type of things take a lot of time to get in the right hands and prove themselves. And right now it's still in the game. I would just not be too big.
All right, so where is your focus heading into trading today?
Funny thing is, every day I come in, I've tried to like whittle down my risk. Yesterday I came in with 7 positions and I wanted to leave with 3 and be like a cool bear and say, oh, I came in with 7, I'm in with 3, I'm not going to get caught like everyone says. Meanwhile, I went out with 8 positions. So it feels as if every day some new things pop up and you could rotate around and look for tight patterns, look for cash flow. I'm going to see how we handle 1422. Do we get there and stall? Do we push through and extend and all those shorts that have been rolling up get squeezed? Or do we push through and fail and then get some kind of rest? So a lot of different things that can go on. You know, I'm going to see how Apple handles this gap open, see if there's a cute trade. Going to see if we get some follow through in silver and in gold. You know, then see what happens with the bank. So there's still a lot going on for, you know, the dog days of summer. And if these are the dog days, I'm proud to call myself Red Dog.
And on that note, happy trading, everyone. Have a great day.